All right, welcome. It's live on real estate, and it's our first show of 2020, guys.
Ooh.
Yeah, how about that?
I love it.
Yeah,
Big.
excited here. We are in sort of late-ish January, and first podcast of the year. We got Chris Pizzoli on the show today. How are you?
Morning. Good
to
to be
see
here.
ya.
Yes, thank you.
Mr. Henry Doe.
Good morning. How are we?
Microphone issue. Everything's fine
It's
now.
good now. It was a little loose before.
Got Mr. Timeshare himself, Chris Foster.
It's me.
That last episode, that timeshare story. I'm just hoping you got something as good as that this week, you know?
I'll figure it out.
That was awesome. I'm David Hall. This is Live on Real Estate. The 11th ranked mortgage and real estate podcast in the country right now, and our goal is to get in the top
world.
5 this year. In the world. Okay.
Yeah, it was an international list.
A lot of good information coming this week. We could talk a little bit about the Super Bowl coming up last weekend. Chiefs and 49ers. I think it's going to be a really good.
It's going to be a shootout.
For whatever reason, I like the Chiefs. I want to see Andy Reid win. I'm kind of a Patrick Mahomes guy. But, man, the 49ers look good. I think it's going to be a tough game. I think it go either way.
Yeah, it's real polarizing.
Prediction,
Right? You got
yeah.
the high-powered offense of the Chiefs. You've got the running game of the Niners.
Strong
You got the defense of the Niners.
And the Chiefs'
Classic
defense
matchup.
is sort of the weak link in the game, I think, which is why I would
100%.
give a little edge to the Niners.
Chiefs like to get down quick, and then they just climb
Yeah.
back.
Niners beat up on Mr. Foster's Packers. I'm surprised. You were in a good mood, though, despite the loss, you know?
Yeah, you can't. I knew it was coming. So
Okay.
if they won, great. If they lost, what was expected?
So what's coming up on the show today? We're going to talk a little bit about 2020 housing market predictions, what to look for when you're buying a house, some homeowners insurance info beyond the pricing, good and bad real estate agents, rent versus buy, credit info, who should be refinancing right now. So certainly an action-packed show. We'll try to get to it all. We always miss something. We always highlight some other things. Who knows where the show could go. But recap of the 2019 market, rates has been detailed, dropping since July. And just in general, 2019 was a great year, in my opinion, for the consumer, whether you wanted to purchase a home, whether you wanted to sell a home, whether you were refinancing. I mean, just a lot of benefits for the consumer in 2019. I'm sure you guys saw it mainly the same way.
Yeah, I mean, 19 was great. Not to get into 20 already, but we're not seeing anything much different than we saw in 19 when it comes to rates. Hopefully, we continue to see that trend. But 2019 was a great year for I know a lot of just clients that we helped getting into new homes, and a lot of clients that even refinanced or purchased in the start of 2019, refinanced again at the end of 2019 because that's how good the market was.
Yeah, I think 2019, to put it in one word, was a shock, right? Because everyone thought the rates were going to go up, and then next you know they kept going down. And people that purchased or refinanced early could do it again, which is unheard of.
Yeah, a lot of late 18 people saw rates at some of the highest we've seen in a little while, right? I mean, we had times where rates were up over 5%, and those people took advantage to get down most under 4%.
That's right. Yeah, and it continues on here in 2020, but certainly 2019 a great year. And as we look towards 2020, folks have been emailing us and sending us information, wanting to know on what we see in 2020. I think that, one of the big pieces of financial information that I wanted to share about what's coming up is just a little something that I snipped out about jobless claims reaching an all-time low, average wages continuing to rise, interest rates staying low. Everybody's predicting an increase in millennials and first-time buyers looking for those entry-level homes. Now, the part about that's tough is those are hot commodities. They go fast. There's not a lot of inventory. There's been some detail around about how builders aren't building as many first-time home buyer type homes. So that inventory is a little sparse, and depending on where you live, because we have listeners from California to Florida all the way here in Michigan where we are, you got different price points for those first-time home buyers. But I think that the big thing, guys, is like for folks that are looking to get into the market and maybe purchase their first home, what kind of advice do you give them, especially because that frustration level of not being able to get what they want becomes very real? And we've seen people that get pre-approved and then they kind of bow out after a couple of months because it gets to be too much.
I'd say with the first-time buyers, one of the nice things, and I think we need to remind them or remember, is they're usually not in a time crunch, right?
Yeah.
They don't have like some pressing need of like this is happening or a job change or whatever the case may be that is, or a house they're selling or that's already sold that dictates their time frame. So, they're fortunate because they have that ability to kind of take their time, and I think we as being the professionals on this side of the fence need to remind them sometimes of that.
Yeah. But there does become a frustration point.
There
Whether
does.
for some folks it's 60 days. For others, we've seen them out there looking for closer to 6 months, and then they just say, "I'll just renew my lease," or I've been on this month-to-month thing, but I got to find a new place. I mean, at some point, it just becomes like laborious to try and find a place to live, especially with low inventory for those first-time home buyers. I mean, I think that's a big piece of it.
Well, one of the things, kind of brings us into a later topic in the show, but bad versus good real estate agents. The good real estate agents with a first-time home buyer are going to continue to make sure they understand these things. Hey, house might go on the market tomorrow. If we don't get out there and see it, and if the agent isn't willing to do it, more and more agents are having showing agents now, so they can show their clients homes quicker. It's got to be. You have to know what the process is and understand you might lose 3, 4, 5, 6 different houses before you find the right one. Now, that comes back. Don't just buy a house to buy a house. So if you've lost 6 or 7 houses and now the 8th one is like, oh, I like it, and we put an offer in, but you're not in love with it. Again, this is your home. On top of that, the lack of inventory. David, I know you told me this, I think probably 2 years ago. It's just funny to me when we talk about the lack of inventory, because let's say the lack of inventory went down from like 10% or 15%. So now all of a sudden you went from having like 20,000 houses to be sold to like 18. There's still plenty of homes.
Right.
It's the same thing when it comes to like, there's more loan officers out there these days, right? So now, because there's more loan officers, there's less loans for individual people. Well, you just work harder, and the best, that always comes to the top. So I don't see that impacting people as much as like the numbers say it is. Yes, on a whole, there are less homes out there to buy, but overall, I don't think there's a huge impact from one individual, either client, real estate agent, loan officer, etc.
I think it's so important just to have a good real estate agent, because your real estate agent becomes your sales rep, because when there's multiple offers on the line, your real estate agent is presenting that offer to the sellers, to the listing agent. So, obviously it's a competitive market. There are, less homes out there. However, having a good real estate agent does benefit you in so many ways to help you win that offer.
Yeah.
At less down,
No, it really does. And the other thing is be prepared, be ready. That's you can't in this market for first time buying. You can't just sort of casually. I'm looking, I'm thinking, I'm popping into an open house. I mean, you've kind of got to be on your toes. You got to have your pre-approval ready. You got to be ready to move.
Yeah, I agree. And I think one of the things that we've been talking about here, we'll continue to talk about, is here we are in January as the show airs. We've been talking about get out there and start looking now if you're serious about buying, because come April and come May every year, most parts of the country in the spring, that's when it starts to heat up. The competition heats up. Now, more homes will probably come on the market, but at the same time, right now, if you're willing to go out and look at homes, this isn't traditionally a time where there's a lot of buyers out there. So if you are serious and you do want to buy that first home, getting ahead of the competition in January or February, I think, is key, and we've been talking about that quite a bit. We got some stats. Michigan's housing market versus the nation. We're in Michigan, and so we're utilizing that state just to sort of do a comparative here. And I like to read the stats, bring them to the people. During the last 12 months, Michigan home prices had a rank of 15th, with appreciation during the year of 6.87%, so almost 7% appreciation. The top performing market during the last year was Nevada. Nevada had an increase of almost 14% year over year. So if you bought a house in Nevada on average, let's call it a $300,000 house, it went up 14% of that number, which is, nearly $45,000, I guess. The worst real estate market during this last 12 months was Alaska. I don't know what's going on up there. A little chilly?
Nothing.
It's always
Nothing
chilly,
is going on up there is the problem.
Still had appreciation.
Yeah, basically flat, 0.4%.
You think that's good or bad for Alaska? I'm just wondering. Like,
We'd have to
that's-
look at
is
Alaska
every year
comparative.
is every year Alaska just like just kind of
I
does
think that means
nothing,
like,
or is this
there's one more person that's moving there every year. That's why it's appreciating.
okay?
Very
The
slow.
median for all markets was 5.6%. So basically, over the last year in the United States, the housing market was up over between 5 and 6%, which is kind of a nice number. Not too hot, not too cold. Michigan a little hotter than that. If you look at the last, let's just call it 5 years of appreciation in Michigan, 7%, 5%, 6%, 7.5%, and nearly 7%. So nice steady growth over the last, whatever you call it, 5 years. And if I'm doing the math right, you've gained about 35% on your investment. And certainly if you bought back in 2012, which was kind of when the turnaround happened, you've gained nearly 50% of value on average in your home. So transitions us into, if you're interested in getting in the market, which a lot of folks are, what to know when you're buying a house. And so we talk about a couple of these things. I just thought we'd go around and maybe each pick one as we talk about the biggest things to know when you're buying a house. Some of our listeners are thinking, hey, I want to buy a house. What do I need to know? Maybe we want to just start from the top and work our way from there. Foster, whatever you, which one of these is your favorite and which one do you want to harp on so that people can get the message?
Well, I think that do you have enough for a down payment / do you have enough to get into a house? Down payment is one thing, so we'll have clients that, call us and say, hey, I heard you can get into a house for 3% down. I'm a first time home buyer. Absolutely you can. What's the purchase price you're looking for? $150,000. So that means I only need $4,500 to get into the house. And I think that's where sometimes the confusion may come with a first-time home buyer is that's your down payment, but then you have your additional costs. So we've talked about it many times on the show. We like to talk about the 4 quadrants. So you have your down payment, you have your lender costs, you have your title costs, and then you have your taxes and insurance. So, just making sure, again, we talk about it all the time, but making sure that you get with an expert that understands, and sometimes even maybe if you don't feel comfortable with the first person you speak to, go and speak to another expert to make sure that, you're getting the same information. And if you're not, that's the first sign that, one of those people probably don't know what they're doing. So you really need to make sure you know how much money you have to, for the down payment.
I think just going off of that and, it ties into understanding your assets and income and things like that. So many people think that they want to put 20% down, but that's all they have. The last thing you want to do is tie up, with appreciation and all that, tie up all this money into your house and not have anything for things that come up, repairs, it's just anything that's major and then now you have no cash and you got to put it on a credit card and things like that. So understanding that, what are your difference in terms of payment between 5, 10, 15, 20%, and understanding how much you really have in the bank that maybe for a rainy day you might need.
And couches and mattresses can be expensive, so you need a little money for that.
Yeah.
Right.
Yeah. Just on that note, super quick, is 15% down if you have good credit is a brilliant way to go. I mean, your mortgage insurance is next to nothing, if at all, really.
Yeah.
Sometimes we can even waive it.
$20.
Yeah, it's nothing. Well, I guess I'll pick check your credit.
Okay.
And I'll pick that one because I think, nowadays there is a lot more awareness around your credit score. There's a lot more access to your credit score. But the big misconception is that Credit Karma tells me my score is 705, I'm good to go. And it's a completely different model, algorithm, calculating system. The easy, quick, here's my credit score scores are not the same as a mortgage credit report, as we know. And it's important to know that because if you're kind of on that fringe, like, hey, I got a 640 here, I should be good, you might not when it comes to the mortgage side. So,
and I'll just wrap that part up by emphasizing that point. I was reading this study. I don't know exactly where the guy got his numbers, but he took 2 people that were both, I think they were 23 or 24 years old, and he extrapolated like all the things that they might buy as an average consumer up until they were 65 years old and they retired. And one guy had a 630 credit score his whole life, and the other guy had a 770 credit score his whole life. And he had computed the interest on homes and cars and everything else he was going to buy. And the interest cost differential between those 2 people were 6 figures. Wow. $100,000 plus in interest that they were going to pay. I think it was actually more significant than that, but it was a big number. And the whole point is that for you to have great credit, which to some degree is a choice if for a lot of people, or poor credit, you just pay so much more in interest. And I don't think people totally realize that, and that's a message that we'll continue to talk about.
Well, one last point on that in regards to what CP, one of the things I tell a lot of our clients when they say Credit Karma, or I don't want to continue to rip on Credit Karma.
No.
There's a lot of companies out there that give you your consumer credit score, but it's Credit Karma or the consumer credit reports are, what have you done for me lately? Whereas a mortgage credit report is, hey, I'm about to borrow you $200,000, $300,000, $400,000. I need to see how your credit's been over a 7-10 year period.
Right.
And to CP's point, those are the algorithms that TransUnion and Equifax and Experian use to make sure that we know what your true mortgage credit score is.
Yep.
So something we don't talk about on the show a lot, but I thought we'd take a minute maybe to educate some folks about what to look for in homeowners insurance quotes other than price. And it's interesting. I've been educated on homeowners insurance because I can remember being a young person and thought, I'm going to go with the cheapest one. And then what you realize over time is whatever is in your coverage is very important to you if something goes wrong. It's not important to you when you're just paying the monthly bill and everything's fine. Sure. But then when you need coverage and then you realize, you didn't have coverage for this, that, or this or that, and you could have opted to have that. It's a really interesting conversation, I think. Anything strike you guys just in terms of your experiences with homeowners insurance as it relates to either yourself or clients and what you guys look for in that's other than just price, which is sort of on the surface on what a lot of people look at?
Well, one of the things that strikes me is, when we send out a loan estimate, which is, the document that your clients want to see to make sure they know what they're paying and their rates and their costs, one of the things that we have to do on a purchase transaction is we have to estimate what we believe your homeowner's insurance is going to be. So I know our team, we typically are somewhere between like a $75 a month or a $900 a year premium upwards to maybe a $1,500 a year premium, because that's where we typically see them. But it'll be funny because at the end of the transaction, I'll estimate $125 for somebody on a $400,000 home, and I'll be reviewing their documents and they went and got it, and all of a sudden their homeowner's insurance is like $650 a year. It's like, how are you doing that, right? And some of the reasons are probably, one, they're picking the cheapest homeowner insurance. But number two, homeowners insurance, and I just found this out 2 years ago, you have a homeowner's insurance like credit score. And as you get older and you don't make claims and you're a good insurer, or suree, I guess I should say, that's where it kind of allows you to get these better things. On the other side of things, I've seen people that $150,000 house and their policy's $3,000 a year because they may be insuring something inside of their home. Yep. They may have a lot of land. So it's crazy to see it. It's not something that on a mortgage end of things we really know right off the bat what it's going to be, but a lot of good points here. I'll let you guys continue.
Yeah. Well, I think that, in terms of knowing what your deductible is, your replacement cost, the cash value, there's just a lot of things that you can go over. And I think just like we're going to get into what is a good real estate agent, a good insurance agent is very valuable, especially because it's rare that somebody can explain it to you in simple terms and make you really understand the differences. And then when you start to break it down, if they're good, and you're going to pay $20 extra a month or $40 extra a month, but you're getting so much more in your coverage, you can see where it might be worth it.
Yeah, I mean, I'll tell you just super, super quick, personal story. We have a trampoline in the backyard, right?
This could be like the
No,
timeshare story from last week.
It's nothing like that.
I'm looking forward to
Didn't
this.
it blow away?
No, it didn't.
Oh.
But we've had it for years for our kids. And
big trampoline, small trampoline?
with the net and the this and the
decent
that.
Size?
Yeah, decent size, right?
Couple bouncers on it, or just one bouncer?
No,
okay,
you can
multiple
get a couple
bouncers.
on there. Right, you can.
Got it.
And when we got it, my insurance agent is a buddy of mine, and so he was by the house one day, and he was like, "Whoa, whoa, whoa, what's that?" And I'm like, "What? Trampoline?" He's like, "I got to know about that kind of stuff," and I'm like, "What are you talking about?" And it's absolutely true. A trampoline's like his worst nightmare, right? I mean, you need the right kind of coverage because a kid gets hurt on that. Screwing around or whatever, not your kid, someone else's kid. I mean, you've got to have the right umbrella policies. And I mean,
did you change your coverage?
I think we already had it.
Okay.
So that was good. But, I'm a moron when it comes to that stuff. I don't know homeowners insurance. So I'm kind of like, I hope people feel about us. I'm relying on someone who knows what they're talking about. But yeah, no. Very important.
Very important.
Very important.
Okay, we're going to transition. Choosing the right real estate agent. An interesting topic this week that we wanted to cover. Good versus bad real estate agents. So, everybody's had their experiences with agents. I know what some of my hot buttons are as it relates to how you find a good agent and what makes a good agent. I wanted to hear from you guys. I mean, Henry, you deal with as many real estate agents as anybody. Chris, you do too. I mean, you guys all do.
Right.
What do you guys find? What are the characteristics? And then, if you find that you don't have the right agent, how do you sort of wiggle out of that and find the right person? Because it's all about a match of what you're looking for.
Correct. I think, in any industry, it's whether it's ours or real estate or whatnot, it's communication. I think being, super upfront about just communicating upfront. This is what's going to happen. This is how I'm going to communicate with you. Being on the same page with your clients. I've heard the feedback from agents. I've heard the feedback from clients. From agents, it's like, the client didn't communicate back with me, or like I can't get in communication with the client. Well, that's kind of your fault because the client needs something and you can't get a hold of them. That's on you. They're just going to go somewhere else.
Mm-hmm.
But that's number one. So number two would probably be, the timeline and just the follow-up. I think that, sometimes clients aren't ready to go for a year, 2 years, 3 years, and agents, bad agents forget about those clients. But setting up a follow-up for once a month or once every, couple months, it's a simple thing to do, a simple text. But a good agent will do that.
Yeah.
And that's how they get a lot of business. That's how they get repeat clients. That's how they get referrals.
That's right.
Yeah. And I think it's there's so much to this, right? I mean, there's so many ways we can go with it. And just to kind of look at it simplistically, it almost boils down to just the same things that define a good versus a bad person. You know what I mean? I mean, it really can be that simple. Agents that we've talked to occasionally, we get the client that is maybe a little more labor intensive than other clients. Some clients are easy, some are not easy. Some people are not.
Yeah.
And the agent that, for example, is maybe grieving to us a little bit about, the number of homes they've had to show this particular person. I mean, it's like, it's kind of your job, isn't it? Like, I don't know what to tell you. So much, but the real good experience agents, like we touched on earlier, when you get in a situation of making an offer, and maybe it's a competitive situation, they know so many tricks of how to get your offer up front and how to make your offer more attractive. Same type of thing when selling your home. The ones that with a lot of experience they're just crafty, and I'm doing a bad job of explaining exactly what I mean by this, but
well, you're just saying they have a lot of wisdom and savviness about what they're doing,
about what
and they make it work.
They do.
They
absolutely make it work. There's a lot more than just saying, if you're looking to buy a home, I'm going to put you on a campaign. I'm going to send you listings. They're going to show up in your email every day. Let me know when you want to go see one. I mean, there's a lot more to it than that.
Well, I have a top couple rules, and some agents may or may not like this, that I'm saying this, but I think for me personally, when I've seen good and bad agents over time, one of the things is if you're finding homes that you're seeing that are listed ahead of your agent contacting you, you're with the wrong agent.
Yep.
Because some clients care more about getting into the house than the agent. And to me, a great agent is on top of things that are coming out every day. They're even ahead of it because they're networked in with other real estate agents in those communities. So they're hearing, hey, this house might come up next week. They're calling their client in advance. I mean, that just feels good when you have an agent like that. The second thing is the non-responsiveness, the text or the email that goes unreturned for a day or two. And, I mean, we in the mortgage business are in a very responsive business, just like real estate agents are. And if you're going to be good, you just don't have I just don't believe a good real estate agent can be not responsive in a very quick period of time. And then it's all the intangibles, right? And to your point, it's about people. It's about how do you got to be able to read people. Who's like kind of tire kicking? That's, somebody that you can get to and who's like hot, wants to buy. Like sometimes I've felt like over the years I've had to explain to somebody like, I am the hottest buyer you have right now. I need some attention because you don't have a. And other times I've been like, I'm just looking. I've still got this, and I'm not ready to sell you. So it's like having that communication piece. I think great agents are great communicators, and then they can understand what their clients want. But there's a lot to it. And unfortunately, and it's just like our business, it's like a lot of businesses, you have your top 10% of the agents who are the ones you probably want to deal with. And then you have, like, in my opinion, that next 10%, maybe they don't sell quite as much, but they are good communicators and they're good with people. And maybe they're not like, top 1% salesperson, but they still do a good job. But then you got this sort of bottom 70 or 75%, and a lot of them are not great communicators. And then you find out, man, there's really a difference. It's not just because when people tell me they have an agent, I always ask them, well, what's that mean? Do you like your agent? Do you feel comfortable? Are they meeting your needs? What's that look like? So I think that there's a lot to it. And certainly then people sometimes will feel stuck. Well, it's my agent. I don't really trust him that much, or I don't really like him. But that's how it's gone. Anything to add to that, Foz?
I mean, just clients don't know what they don't know, right? They think that an agent is an agent for the most part. So, that's one of the things we try to do is when somebody doesn't have an agent, explaining the benefits of somebody that already we've worked with or we do work with on a weekly and monthly basis. So I think that'd be the biggest thing out of this is just make sure you're doing your research, just like you do when getting a mortgage with your real estate agent. It really can be that much of a difference.
It's like saying a video guy's a video guy. I mean, we got Chris. There's a difference, right? Yeah. There's a difference.
Yep.
It's not just one size fits all, right, Jackie? Right. It's good to have you here today. Glad you could make it. Yeah, are you? Okay, good. Rent versus buy. We got two subjects left to go. Two subjects. Three subjects. Rent versus buy. A few questions to consider. So we have seen scenarios, and I thought we should highlight these on the show. I was going to put each of you guys on the spot and kind of reverse it. When should people rent? When is it not smart to buy? Because there are scenarios where renting is the right thing for people versus buying. Now, we know that, we just detailed earlier in the show, if you bought a house 5 years ago and you've picked up 20 or 30%, 30-some% on that appreciation of that, then, that's obviously money you're making. But, a house is also an expense to some degree in addition to that appreciation, whereas renting, you're not getting the appreciation, but oftentimes you don't have to fix the things that are broken. Somebody else is taking care of that. But I just want to get a sense from you guys. If you could come up with one scenario each of who should be renting versus buying, who would you talk about that should be renting? What category? Of Henry?
100%.
Why is that?
Super convenient.
Yeah.
You don't have to ever fix anything. People come by and fix things for you.
Yeah.
You're not responsible for anything. Now,
although you told me you're going to buy this year or next year.
Correct.
Yeah.
I mean, when you have no money, that's what you rent. No, just kidding. When you're young and you don't have money saved up,
right,
and you don't want to throw all your money into a house,
right.
I mean, that's probably
you want to build up a little nest egg.
Yeah.
I think it's a lot easier right now just to talk about probably the people that should be renting and then everybody else should be buying, right? There's probably, in my opinion, 2, 3, 4 different scenarios where people should be renting. So, you get a job at GM, but you're somebody that they're gonna, they're gonna probably move you again in 2 years. Well,
sure.
You buy a house, you spend $2,000 or $3,000 on closing costs plus your down payment. Then 2 or 3 years later, not only did the market go down a little bit potentially, but at the same time, now you got to get a real estate agent, which now you have to pay the real estate. So it's got to be the stability of being there, at least thinking that you're going to be there for, I'd probably say a 3 to at least 5 year period minimum. If you're not, really look into the cost, not only up front, but on the back end of things as well.
Yeah.
I was going to say to do the analysis because, to your point, if I'm moving to a new city and taking a new job somewhere, let's say I'm moving to Charlotte, North Carolina, I might find some places that I think are rentable or nice rentals for, let's call it, $1,800 a month. And then I'm looking at a few houses or a condo to buy, and I'm doing the math on that. And you kind of got to figure it out. That's where a good mortgage guy can come into play by saying, okay, you're going to need this much up front, then you're going to pay this much a month versus that. And to your point, short-term housing often can be a better rental situation. I also think that for people that are young, that don't have great credit yet. I think that making your credit a priority versus buying is often a good idea. You can have a 650 score and buy a house, and there's certainly good options. But I almost like to see somebody who's like 23 or 24 who's thinking that way. Hey, in the next year, I'm going to get my credit up to 720, then I'm going to buy. Because there's a discipline that exists around that. Any other CPA?
Yeah, no, that was the piece I was going to mention was the credit. I mean, if your credit is not really where it needs to be, then you really should rent and make your credit a focus. Yeah.
Speaking of credit info. I just wanted to take a minute just to talk to the folks about, things that are affecting their score, areas that you can improve your score. I think that, the obvious thing with credit that is most important to everybody is paying all of your bills on time. I know there's a few other things that you guys might want to mention just quickly as we sort of wrap up the subjects of the show this week. But like, if you could give somebody one piece of credit advice that you think they may not know, what do you think you would tell somebody if they walked in here today and say, hey, I don't really understand why my credit score is lower than I thought it would be? What would be one thing that you might see there?
I have seen a lot of people with very, very good credit, but they got pissed off over some like medical thing or whatever the case may be, and they will hold a hard line.
$90.
Yeah, of like, I'm not paying that. They screwed me over and this and that, and they have some dumb little collection account thing that absolutely will destroy you.
Yeah.
And I'm all for taking a stand, and, trust me.
You more than anybody.
Yeah, I mean, I'll go against the man right along with you, but man, are you cutting off your nose to spite your face when you do that.
Good point.
So
I think one of the biggest things that we see is like for people that had bad credit, so whether or not you got into credit card debt when you were in college and you weren't able to pay it and you had collections, but then you started to grow up a little bit, you paid it off, you started to see your score increase. Now because these people had bad experiences with credit cards, they now don't use them.
Yeah, correct.
You need to use revolving credit. It's one of the biggest things that'll start to improve your credit because it shows the bureaus, that you are now responsible. Maybe you weren't in the past, and that goes hand in hand with, credit won't change overnight. I'm seeing these commercials online these days where like you can click a button now, and my credit instantly went up 20 points. Again, that's those consumer credit reports. That's not your mortgage or your auto credit reports. Again, we could probably do a whole show on credit just to explain all the differences, but use revolving credit. Don't go on the old myth of, hey, have a balance. Remember, I don't think people think that anymore, but I remember at the start of my career it was like, well, Susie Orman told me that I need to have a balance and not pay it off in full every month. That doesn't matter. Using the card, paying it off every month, not getting interest will increase your credit.
And not closing accounts. That was my thing.
There you go.
Do not close accounts. Keep them open. Use a little. Pay it off. That's probably the best habit you can have.
My biggest other thing would be if you have a credit card that has like $3,000 on it, don't max it. Just use like $1,200, $1,000, 30 to 40% of it, and pay it off every month. Yeah. When you get those balances up there right near the limit, it actually drags your score a little bit. And that's something that a lot of people don't know is that if I have a $5,000 credit card, well, why can't I use $4,500 and then pay it off? When the credit reporting agencies read that, they think you're maxing out your credit. Yeah. And if you have a bunch of those where it looks like you're extended, even if you're paying it off, sometimes it can drag your score. So I like either raise your balance from 2,000, your limit rather, from 2,000 to 4,000, and only use that 1,500 again, so that you're creating room in there at the top end of what you have.
I think the last thing I'll say too is beware of who's pulling your credit, and be aware of when your credit is being pulled, because too many, inquiries over time, it's bad for you.
One more thing.
Oh,
just because you paid something off too that was a problem. Oh, that collection account, all good, paid it.
Yeah.
It's like,
that's not how that
doesn't work that way.
No.
It happens.
Takes a little time.
Yeah, it takes a little while.
Last subject of the show, kind of an interesting one. Who doesn't need to refinance right now? We've heard so many people are refinancing. There's obviously a great opportunity right now for people to either lower their payment, maybe shorten their term, maybe they even extend their term if they want to create some more room for themselves from a budget standpoint. Maybe they have credit card debt, they want to do home improvement. These low rates create an environment for so many people to refinance, but who doesn't need to refinance right now?
If you're looking to sell your house in the next probably 6 months to a year, or just a short time frame, probably don't need to refinance. I mean, even if you're in a high rate,
Yep.
I mean, you're going to be in the house for such a short period of time.
Yeah, it's a good one.
I go back to, if you don't fit into these 3 or 4 categories, then you don't need to refinance. You're not looking to take any of your equity out. You're not paying PMI, right? So if you're paying PMI, you probably do need to refinance. If you have a good rate and you're not paying PMI and you don't need equity, then you probably don't need to refinance. And then last but not least, the term, right? So depending on your rate, we'll get calls once in a while, and it'll be, I have 28 years left at 3.5% on a 30-year. I really want to get into a 15-year loan. That's kind of like a 50-50, because even though you're probably not going to get that much better of a rate on your, are you responsible enough every month to continue to make your payment as a 15-year? Some people, we've had clients that really say to us, like, Chris, I know my rate's pretty good and I could just pay extra, but I'm not, responsible enough to do that. So if you can get my rate at or below where I'm at right now, I'd rather do a 15-year, because that's going to be what works for me.
Anything, CP?
No, I mean, I think we kind of covered it.
Yeah.
Obviously, if you don't have a mortgage, then you don't need to refinance
Yeah,
it.
that's a good point.
Unless you need
Unless
money.
You need equity.
The other folks are like the ones that took out a 15-year like 12 years ago, and they only have 3 years left. Even if they have a higher rate, oftentimes they're so deep into the principal now that there's no need to refinance.
Right. Absolutely.
And if you have like a small balance, if you only owe, let's say, $25,000 on your mortgage, you could be at like 6%, but the difference between 6 and 4 just isn't that great at $20,000, so it's not worth it. Well, good job this week, guys. I mean, I feel like that we really
That's pretty good.
went through a lot of information on the show. No timeshare. We had a little trampoline issue.
Trampoline.
I like to bring something out. Henry revealed to everybody that he needs to work harder to make more money because he just doesn't have the money to buy a house yet.
Correct.
Working on it, though.
And he's got bad credit.
He's
I
a
think,
young
too.
guy.
He's
No.
got decent credit.
I bet that Henry's pristine if I know him.
Pretty good.
Any parting shots, Foz?
I believe the North Carolina NCAA Division I basketball team is now 8-9 on the season.
Wow.
Not sure. Where
Henry
that
was
is
talking
going.
a lot of smack before the season.
I didn't
too.
talk about our team this year.
Yes, you
okay,
did.
Okay,
Yes, you did.
when we had Cole Anthony.
Yes, you were texting me, and you were.
We lost
all
half our
up-
team. We're
Okay.
playing with.
But where are the rest of the guys? What's next man up? I mean, a
Well,
lot
Roy-
of teams go next
when
man
your
up.
coach gives up on your team,
Oh.
he's done.
He's a
done.
Hall
just-
of Famer.
He said,
That's
this
it?
is the worst team I've ever coached,
Yeah.
essentially.
He said least talent.
Least talent.
Least
And
talented,
CP,
yeah.
Worst team I've ever coached.
CP was at a historic Big Ten moment
Oh, yeah.
last week. He
right.
was at the game in East Lansing where Mr. Winston got the all-time Big Ten assist record over
right.
at Teen
Kinda
Cleves.
cool.
That's right. Yeah, it
love
was
it.
very, very cool. We were we were aware of it, and we were counting down as we were sitting there and watching the game. And it was not one of Cassius's most prolific games by any means. He was
Yeah.
kind of quiet, and so we were wondering if he was going to get it, but he got it.
Went
It was
with the
good.
buddies
Was
to
that
the game.
before or after the Purdue game?
This
After.
was after Purdue
Yeah.
was before that.
Yeah.
What do you?
Henry's always taking shots.
Yeah.
He's
Taking
kind of a
shots,
hater,
yeah.
you know.
I'm 100% a hater.
And this Saturday is Mr. Foster's birthday. Happy
Wow.
birthday, Foz.
Thanks.
Well, that is
Yeah.
big news.
44.
Should've led with that.
What are you turning, 43, 44?
-6, 38.
Got it.
Attaboy.
For everybody here at Live on Real Estate, Jackie, Chris, the whole crew, Henry, CP, Foz, thanks for listening and watching this week, and we'll see you in February.
Take care.